Well, this might not be good news, might look like bad news, but I'll explain why this is good news, okay? So Deutsche Bank came out here in the past 24 hours or so, and they downgraded ELF from a buy to a hold. Now, they also raised their price target, which is interesting because the price target is technically lower than where the stock's trading at right now, but they raised this price target, but yet they downgrade the stock. Interesting. So that's a whole situation, okay? Now, they believe it has limited upside. As far as catalysts, they say continued expansion for ELF and Road product lines, strong medium-term top line and profit growth opportunities. Overseas growth runway remains intact. True. They say risk factors, valuation concerns, 35 times next 12 months consensus earnings. So basically, this is a call around valuation. The stock's rallied a lot. They say shares have already rallied 25% since early August, reducing upside, they said. They're neutral. Optimism on growth remains, but valuation ceiling tempers conviction. Analyst comments, they say ELF shares have appreciated about 25% since early August, surpassing the $121 price target. As such, we move back to the sidelines today and downgrade the shares to hold, even as our price target rises to $128 on a roll forward in time and continued general optimism around the medium-term top-line profit growth opportunities. We continue to see room for sizable expansion across both the ELF and Road product lines, particularly overseas. However, at current valuation, nearly 35 times next 12 months consensus earnings and 20 times next 12 months consensus EBITDA, earnings before interest, taxes, depreciation, and amortization, we are held back. Now, the reason this is good news here in regards to ELF, okay, is analysts goes more bearish on, they're not bearish on ELF, right? They're going neutral. They're just like, I'm not bullish, I'm not bearish, we're just in the middle now. The great news about somebody like Deutsche Bank coming out and saying that is twofold. One is, what happened to the stock here today? Up very nicely, closing at $130+, which is one of its highest closing prices of this entire year. So basically, investors said, okay, cool, we're buying, right? Now, the other important thing I think about this is it's almost impossible to be bearish on ELF now at this point in time. Now that you know the growth rates are about to skyrocket back up again, right? Now that we have the worst of the tariff fear out of the way, it's nearly impossible to be bearish on ELF. And this stock has a runway to 200 plus again. It's just a question of how long does it take to get there? 6 months, 12 months, or 18 months? That's really the only question. The stock's headed to 200, but does it happen this next 6 months, the next 12 months, or the next 18 months? That's really the only question at this point in time, at least in my opinion, right? It's going to head back to all-time highs, which all-time highs for ELF were around I think they're around 210, 212, something like that, right? We're headed back there. So ELF has a lot of, I guess you'd say, really exciting times ahead, and this shows that analysts can come out and, they're like, they kind of brush it off, okay? Now, what about Celsius? What's the good news in regards to Celsius? Wow. PepsiCo and Celsius confirmed strengthening of their strategic partnership on Friday. Under the new agreement, Celsius and Alani Nu brand will be distributed through PepsiCo, U.S. and Canadian distribution network to greatly expand the rising brand's retail presence and reach new demographics. Okay, that in itself is huge. Okay, Alani is a brand that just got acquired by Celsius not very long ago. Alani has unbelievable growth. And now Alani's going to get into the PepsiCo distribution. Now, what happened to Celsius when they got into the Pepsi distribution is Celsius's revenue took off like a rocket ship. Then about a year to a year and a half after that deal went through, then Celsius kind of had a come down of the growth rates. Now, my opinion on this is PepsiCo won't over-order like they did on Celsius. So I don't think we'll have to deal with it as big of a problem. But the moral of the story is here, folks. Alani's revenue growth is going to be outstanding for a long time. And when I say a long time, I'm talking really like at least like the next 2 years. Because Alani's already a brand that's got strong growth without the Pepsi deal. Now you're going to put the Pepsi deal under it, and a lot of this distribution will take place in 26. Some will take place here in 25, but a lot of it's going to take place next year in 26 as store resets come and all that sort of stuff happens. And so just understand, Celsius's revenue growth is going to be incredibly strong for quite a while. Quite a while. Like maybe we have some sort of come down in 27 or 28. That's a potential, but it's going to be a while in regards to that. Celsius's revenue growth. Celsius's revenue growth rates in 2026, folks. I mean, whoa. Like we're going to be talking about I think there's going to be some quarters that revenue growth is up well over 100%. Because you're going to have easy comps. Celsius numbers should be up on a year-over-year basis in 26. You have Lelani deal, and now you have the next part we're getting into. Simultaneously, Celsius has acquired U.S. and Canadian rights to Rockstar Energy brand from PepsiCo, which will add classic energy drink offering to the company's portfolio and potentially appeal to a wider consumer base. PepsiCo retains ownership of Rockstar Energy internationally and will continue to distribute it domestically for Celsius Holdings, which is a very interesting deal that, they're still going to retain their ownership of Rockstar internationally, right? So, intriguing. Now, Rockstar, what I can tell you about that brand is that brand was really a direct competitor against Monster, traditionally. I can also tell you when I worked at Quick Trip and I was a lot more into the nitty gritty and I was able to see the numbers of, what stores were selling how much and all those sorts of things. Rockstar was always a strong number 3 player. But keep in mind, this is like 10 plus years ago. I worked at Quick Trip, okay? And I was a manager and whatnot, and I got to see all the numbers that, every single SKU was selling in the stores and things like that, okay? So it's been a long time. But back then, Rockstar was a really strong number 3. Now, PepsiCo bought Rockstar for a ridiculous sum of money a few years ago. I think it was back in I want to say 2020. And it looks like PepsiCo kind of crashed and burned it. They don't, PepsiCo's got so many brands, so much going on. It looks like they just kind of failed Rockstar, and Rockstar has been in kind of a tougher place. So maybe Celsius will be able to get things rolling there, right? As part of the transaction, PepsiCo has invested $585 million in newly issued Celsius convertible preferred stock and increased its stake to approximately 11% on a converted basis. PepsiCo will also appoint an additional director to Celsius's board. Going forward, Celsius Holdings will take on key strategic role of energy lead for PepsiCo in the U.S., overseeing strategy for Celsius, Alani Nu, Rockstar, while PepsiCo handles distribution. Now, this is huge, folks, okay? If we want to call the original investment like a teaser investment of PepsiCo and Celsius getting into bed, this is we're married. This is marriage at this point in time for PepsiCo and Celsius. And what this means for Celsius is now they have, the number 2 most important drink company in the world fully aligned with them. Now that PepsiCo has a 10% plus ownership stake of Celsius. And now no longer is PepsiCo a competitor to Celsius. Now that, Celsius is going to have Rockstar Energy in the United States and Canada. So there's no reason for PepsiCo to even try to compete now. They just want to try to grow Celsius as big as possible so they can grow that ownership stake in Celsius as big as possible. I mean, I'm sure PepsiCo would love it if, we could talk about Celsius someday being a $50 billion or $100 billion market cap. That'd be a great thing because if you run the math on that and they've got a little over 10%, 11% of, the stock, I mean, we could be talking about PepsiCo's stake in Celsius could end up being, if it was a $50 billion company, we're talking about, a $5 billion plus stake at that point in time on a relatively small investment, right? Additionally, we could talk about if Celsius builds their business over the, I'm sure in the 2030s, Celsius will start paying some sort of big dividend to all its shareholders. That's my hunch on that. They're just going to be focused on growth here for the remainder of the 2020s. 2030s, we'll be talking about this as a dividend company. And then if you think about PepsiCo having 11% of the shares, well, shoot, there's a whole lot of dividend money PepsiCo could start bringing in, right? So that's always a potential there. And I mean, to think about this even deeper, as Celsius's cash flows build up as the years go on, my guess is Celsius will also probably buy back shares. So if PepsiCo has 11% ownership now, and Celsius buys back tons of shares over the next 5-10 years. They're not going to buy back any meaningful shares in the short term because they're so focused on ridiculous growth. But I wouldn't be surprised if all of a sudden 2028, 2029, 2030, you start hearing about big share buybacks. Well, PepsiCo's ownership, if PepsiCo doesn't sell and Celsius starts a massive buyback, that ownership stake could go to 12%, 15%, 20% for Pepsi over the long term, which, once again, if Celsius becomes a drink giant, a $50 billion or $100 billion market cap, my gosh. And the dividends, we could be talking about Celsius pays out at that particular time. And then for Pepsi, you also have the potential of maybe you sell off the position long term, right? Like, I don't know, like we'll see what happens there, but I think it makes sense from PepsiCo's perspective. And I think really truly the one that gets the best deal of it. And obviously PepsiCo gets to make money off the distribution as well. So do keep that in mind. But I honestly think the one that's getting if you had to say who's the absolute biggest winner, I honestly think Celsius is even a bigger winner here than PepsiCo. Like both sides should win in this situation, but I think Celsius is the bigger winner. Winner, chicken dinner. Stepping into the role of PepsiCo's strategic energy drink captain in the U.S. is expected to be a pivotal milestone in our journey to shape the future of modern energy and grow our brands with leading beverage distribution system, stated John Findlay, the CEO of Celsius. This agreement marks the next step in PepsiCo's reshaping its brand portfolio to position us for the long term, said the CEO of PepsiCo's Beverage US. Energy is an important growth category, and we believe this move with our partner Celsius creates meaningful multi-brand energy portfolio that better positions us to serve the customer needs, right? You got to understand here. Okay, PepsiCo and Coca-Cola, they both failed miserably. Miserably. Not a lot of people know this. Coca-Cola and Pepsi both did what? They both tried to be successful in the energy drink category, and they both failed miserably. They fell flat on their face. They tried, and they tried, and they tried for the last 20 years, and they could not do it. So finally, Coca-Cola years ago threw in the cards and said, "The hell with this. Let's just buy an ownership stake in Monster, MNST, an old stock of mine, right? I owned it before it was even called Monster Corporation. I owned it way back when it was called Hanson's Natural Beverage. That's how OG I was as an investor in that company back in the day. And that's been incredibly successful for Coca-Cola and successful for Monster as well. And so PepsiCo realizes we failed. We failed miserably. We've tried to launch so many brands, they all failed. We try to Mountain Dew Energy, all this different stuff. We try to buy Rockstar, we can't do it. And so they realize, let's let the next energy drink giant go ahead and do it for us. Let's take an ownership stake in them. That way we capture the success of it. Because you've got to be really into the weeds to really be successful at this. And PepsiCo and Coca-Cola aren't. Those companies understand the soda game, but they do not understand energy drinks. They don't understand the marketing behind that. You got to really be into it, man. You got to understand social media on a high level and things like that, right? So now in regards to market share for Rockstar, it looks like it's around a 2% market share, somewhere around there roughly, which if you combine Celsius, Alani, and Rockstar, they should end up having about 20% market share, which is going to be a very strong combined company. Now, keep in mind, as Alani gets more distribution, right, we could be talking about, well over 20% market share of this total company if we talk about it a year or two in advance. Additionally, if Celsius can revive the Rockstar brand, hey, then we're really talking. Then we could be talking about maybe market share pushes closer to 25%. That would be pretty darn exciting, right? So, yeah, Celsius shareholders, it's a fun ride. It's a fun stock. And the growth rates are just going to be astronomical. I hope everybody's ready to get their flapjacks flipped on those growth rates. And after seeing this deal go through, where do I think the stock's headed? Listen, this stock's taking out all-time highs. And I think it's taking out all-time highs in the next, probably 9 months. And I think that probably regardless of where the stock market goes. Now, am I going to play call options on Celsius in the short term? And, no. But, I really think Celsius is probably going to boom over this next 9 months. As people start to see these numbers roll through, Oh my gosh. You gotta understand, people are investing in companies like Elf and Celsius for what? The revenue growth. Like, that's why they're in those stocks, right? And there will be a day, and it's in the 2030s, when Elf and Celsius, it's not about the revenue growth, it's about the margins, it's about the profitability. But for right now, people just want to grow that top line. That's why you invest into an Elf. That's why you invest into Celsius. And both those companies are about to come through and just absolutely smash it. Smash it. Whew. So get ready, folks. Fun times ahead. Fun times ahead. And Celsius will be at new all-time highs before you know it, okay?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are three main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head. And you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there.
Cheesecake Factory. Oh my goodness, do I love this stock. It has performed very well over the past 5 years, up 162%. That does not include all the dividends also this company has paid out, but it's been a drama show for this company over the past 5 years, right? But here's the deal with cake. You got to understand, this is one of the most miraculous companies, I think, in the market. They've had two of the worst situations you could ever imagine thrown at this company in the past 5 years, right? They had to go through a once-in-a-100-year shutdowns back in Rona, right, where the restaurants were forced to be shut down. And then when they were finally allowed to be open again after being closed for a long time, what happened? They were only allowed to have limited options, limited seating at their restaurants. You know, to do all like the, you can't get too close to this person, so this table needs to be like way over. Like, what a disaster, right? Like, and a lot of restaurants didn't make it. A lot of restaurants did not make it through that. A lot went under, went out of business forever. They closed their doors and that was it, right? Then, what happens 2 years later? We go through the highest inflation in the United States of America that we've gone through in decades. Decades, as in like 4 or 5 decades. Incredible inflation. And that devastated so many restaurants because so many restaurants were not able to essentially pay the workers what the workers started demanding for wages. And then they had to start paying crazy prices for like a tomato and beef and chicken and all this stuff. Like pricing just went insane, and eggs. And so a lot of restaurants could not make it through that inflation cycle we had to go through, right? And so if you got through that, if you got through those two disasters for the restaurant industry, and ask anybody that's run a restaurant in the past 5 years, they'll tell you, brutal. What a brutal time. I mean, restaurant business is always brutal, but this has been an exceptionally brutal time period the past 5 years. If you made it through this, you're strong. The company's stronger than it's ever been on a financial front. You look at the income statement, you look at the money starting to pour in, you look at the balance sheet, you look at how well positioned the company is, you look at the stock price. It's never been stronger than it is, and it had 2 disasters thrown at it in a 5-year span, right? Now, when it comes to cake, this is a 6-prong investment, I call it. Okay, where there's like 6 prongs to this one that make it such a compelling buy now. It was a buy yesterday, it was a buy the month before, it was a buy last year, it was a buy the year before, it's a buy next year. 6 prongs here. Prong number 1 is the Cheesecake Factory itself. Like, that's an ATM machine of a business model. They're packed all the time. They do crazy numbers, right? It's, one of the greatest restaurants in the history of mankind in terms of just being able to make incredible money per restaurant open. Like, it's ridiculous. You can look at the unit volumes Cheesecake Factory restaurants do. It's ridiculous. It's insane, okay? That's prong number 1, ATM machine. Prong number 2 is North Italia. North Italia is really going to fill a void over this next, I would say, several decades, essentially, in the United States of America, like Olive Garden kind of filled in the last few years. Or not, I should say last few years, last few decades. Olive Garden expanded across the United States of America. They filled a void of like an Italian restaurant. And nowadays, people realize like Olive Garden quality of food is not very good, right? The restaurants look super outdated. It's not like it was, 20, 30, 40 years ago, right? So North Italia is coming in to really fill this void with much higher quality food, like not even remotely close. Like Olive Garden's, if you've eaten good Italian food, Olive Garden's a tough eat, right? North Italia is coming in with great food. They're coming in with restaurants that actually look amazing. That actually, like, if you're somebody that has some taste in terms of like going somewhere, like you're like, oh, this is a nice place. This is a classy place, right? And still coming in with a price point that's not just like, oh, only rich people can go there or something like that. So that's coming in. That's just massive expansion. We're going to see, you're going to see multiple locations in pretty much every big city within the next 5 years for North Italia. Okay. Prong 3, Flower Child. This is an insane concept. This is the most exciting thing, I think, in the whole company. This is more exciting than North Italia. This is more exciting than the Cheesecake Factory itself. Flower Child, we have an opportunity with Flower Child to expand this to locations. Like, you could have more Flower Childs than you have in total restaurants if you combined all the other brands 10 years from now. When I think about Flower Child, this is a perfect concept for really this next 10, 20 years. And the reason being is Flower Child is a concept that really focuses on healthy food. You don't have a waiter or waitress type experience that is very different from like a North Italia, like a Cheesecake Factory. You just go up there, you look at the menu, say, oh, I want the global and, with shrimp or something, whatever you want to get, right? And they make it for you. It's very high quality. They fresh make it for you. It's delicious. And they bring it out to your table or you get it to go. Also, it's capitalizing on the whole to-go business. From my understanding right now, they have an exclusive relationship with DoorDash only, from my understanding. But I wouldn't be surprised if 5-10 years out there on all the different, food operators platforms. And that's just a crazy opportunity, right? Because if I think about all that Uber Eats, DoorDash, all the food delivery, like that's just going to continue to get bigger and bigger. And it's a perfect concept that can work in the suburbs. It can also work in the office environment, in corporate areas where you're doing big lunch volumes, big breakfast volumes, right? Or maybe people after they get off work. So Flower Child works just about anywhere. So I love that one. By the way, I had to mention this because at the exact time I was doing this screenshot of Flower Child, a classic came on. A classic. You're a Flower Child. Like it was crazy timing. And I'm like, oh my gosh, like I got to record this, right? I mean, I got to take a photo of this. Like this is ridiculous that the fact that I happen to be taking a Flower Child screenshot and Flower Child came on a song. I'm like, that's like, what are the chances of that, man? That's crazy. Prong number four, when it comes to this investment in Cheesecake Factory is around Fox restaurant concepts. This is something they own. They own a ton of different brands here: Culinary Dropout, Blanco, the Henry Doughbird. Obviously, we already spoke about Flower Child, Flyby, all these different brands, right? I love Olive and Ivy. No, this acquisition Cheesecake went through. This is what, Facebook buying Instagram, what that meant for that business is what this deal will end up meaning in the end, in my opinion, for Cheesecake Factory, okay? And so they did this deal back in 2019. Then obviously we went through Rona in 2020. Everybody forgot about it. It's one of the most magical deals ever. They were able to get the Fox restaurant concepts from a gentleman named Sam Fox. I think this is a legendary restaurateur. I think he's, one of the most amazing, at least, in the United States of America, one of the most amazing restaurateurs in the United States. Okay, what else am I gonna say? Like, dude's a legend. Like, you can if you ever want to do some research on Sam Fox, who he is, what his deal was and whatnot, you can do it. There's been plenty of articles written about him over time. The man's very exceptional when it comes to the restaurant industry. And I've been to so many of his restaurants, which once again are all owned by Cake now, and I'm nothing but insanely impressed. Like, ridiculously impressed. And believe me, Cake wouldn't have done this deal unless they were like, dang, he's got something special here. And from my understanding, Sam Fox just didn't want to try to grow this into a massive company like a Cheesecake Factory or Texas Roadhouse or something like that, right? And so he handed off. He got a crazy 9-figure exit from it. Good for him. And he said, Cake, you can take it from here. And I don't know, he might have Cake shares. I hope he does. I would love to see him prosper from Cake over the years as well. I don't know if he does have Cake shares, but I hope he does because, his concepts are going to come in clutch over this next decade, okay? Now, in terms of Cake, prong 5 of why this is such a great investment is really around valuation. Forward P on this one, 17, 2-year forward P 14, way too low. For a company that's got the next 10 plus years of growth ahead, Way too low. Way too low. That shows me people still don't understand this. The forward P on the stock should easily be in the 20s or 25s right now, okay? Prong number 6 when it comes to cake is dividends. This was just paid out to me in the public account here a few days ago. Cheesecake paid me $868 in dividends there. They pay their dividends every 3 months. There's another portfolio of mine. They paid me $459 dividends. I own cake in other portfolios as well. So you add it all up and I made a lot of money just in dividends in the last 3 months. And that's great. I love making that dividend money because then you know what I do with the dividend money? I go buy more stocks with it. Sometimes it's other dividend payers. Sometimes it's growth companies. It's a beautiful thing. Okay. So cake, love that one.